Good morning, afternoon, or evening, ladies and gentlemen. Happy Sunday. I hope you've all had a wonderful weekend. This is going to be our daily cryptocurrency market update. And we're going to be looking at a number of things in this video, in both the crypto space and the sort of broader economic landscape. We're going to be looking at the possibilities that institutions are maybe starting to gain exposure to the crypto space again, and we're going to be looking at GBTC, which is Grayscale's trust, as a way to view this. This was something that the market sniper, or the crypto sniper, Francis Hunt, tagged me in yesterday. So all credits to him for finding this. I actually wasn't watching GBTC, but he rightfully says that GBTC is an accepted institutional instrument, and potentially, this is a way to measure. And this is the amazing thing, and I've taken a great deal from Francis. He's really helped me through his content, shape my own understanding of the markets. But this is a way for people to essentially look at what institutions are doing and what's their involvement in the crypto space. And what we'll do is we'll go over that. We'll pull up the GBTC chart. Bitcoin from its lows is roughly 33%, and of course the GBTC chart is I think it's around about 50 something percent from its lows. 52% from its lows. So is this institutional money coming back into the crypto space? We're going to be talking about that in this video. We're going to be looking at a number of other things. We will do some TA on Bitcoin as well, because it's done very well. I did say that in the coming week I'll be sharing my own sort of positioning, what we've done, and if you actually, for anybody that wants to kind of follow what we've said from the start of the year, you'll probably know already what the positioning is. If you go and watch my video from January 1st and my daily crypto videos up until now, we've been very much on the trail of not being bears down here and actually saying that there's more reason potentially to be a bull here than there is a bear. But I'll do a much more in-depth separate video for that for you guys, so please stay tuned for that. And we're also going to talk about the US will hit its debt limit Thursday, taking steps to avoid defaults. Yellen warns Congress. So even though we've said we're not, based on the sort of economic recessionary narrative, necessarily bearish at these low points, and we think the worst is behind us, we've done lots of studies on the 2-year yields and how this leads the Fed funds futures. And we've said, look, before we had the CPI, before we had any of this, we were looking at this at the back end of last year and we were saying they don't have another point in them. Since the CPI that we had recently, you've got 25 basis points being priced in for February, and then, not really much more pricing after that. But we've already looked at all this. We looked at the 30-day Fed funds future. We looked at the euro dollars. This is simply cross-market analysis that I actually haven't seen any other YouTuber talk about this kind of stuff in terms of looking at the 30-day Fed fund futures rate. And the reason this is important, because you've got to understand that markets are forward-looking. So even at a point where things are doom and gloom, it's kind of like when you get a bad earnings report for a company and the price goes up. It's been priced in prior to the actual event taking place. Or the dollar. The dollar has been extremely weak. This is of great significance to me. Now, the dollar, in my opinion, is likely going to get a pullback. You're going to have people buying this up as support, in my opinion. How's that going to affect the crypto space? I don't want this to be... so much I can talk about, guys. It's not even funny. But do we do something like this, where we have a bit of a sort of indecisive week, maybe on a bit of dollar strength, and then we continue the climb up? Or do we have a deeper correction? We have said, really, since the start of the year, we're positioned for whatever happens and comfortable with whatever happens. We're in a good place as a community right now, because it doesn't matter to us whether the price goes down at this point or goes up. We'll benefit from both scenarios, and that's something that I will be talking about a little bit more this week, and sort of hedging your bets no matter what outcome takes place, because the markets have humbled me more times than I care to share, through both trading and investing. And ultimately, for me, down here we were saying we don't know that this is the bottom, we don't know that it isn't, but we're going to act accordingly and hedge our bets either ways, and that's what we've done. And of course I will talk to you guys a lot more about that in the coming week. But there's a lot to go over in this video, so I just want to really get back on track and focus. I find it very hard. I've got one of those brains that just fires at a far faster rate than what actually comes out of my mouth, so it can be quite that's always been a critique that's been levied to me, is that actually there's a bit of a disconnect there. It's kind of like a loose wire. Anyway, so on a note, pulling up what the sniper tagged me in yesterday, or tagged the wrong All in Crypto account. Before the Bitcoin move, there was a bid run on Grayscale BTC and discount compression. GBTC is an accepted institutional instrument. Meet your new advanced warning instrument of the market moving insiders. Watch it very closely. And then it meant to tag me there, I believe. And this, of course, was the tweet. Grayscale GBTC is an interesting one as it has underperformed this bear but overperformed last bull. Curious if those who bought the GBTC dip have better upside compared to purchasing actual GBTC itself. Curious if overperforming again. And then good news, Grayscale BTC discount is getting bought up for the first time in forever. So it's been a long time, really, and they go to show a series of charts. This is the discount premium. You're still at a 36% discount from spot Bitcoin. So how Grayscale works, very quickly, guys, just give you a brief overview. We know all the stuff that's happening with Barry Silbert and Gemini. We've covered that in another video. Very quickly, how Grayscale's fund works is they have to buy Bitcoin and then they basically break it up into shares and sell the shares. So each Bitcoin share is representative of actual Bitcoin behind it, and it's trading at 36% under where Bitcoin's currently trading, where their spot Bitcoin actually is. So that's a huge discount, okay? Now, if the market's going to go up, it suggests that this discount is going to close, and actually there may be an arbitrage opportunity here because you're going to essentially appreciate more given the massive suppression that it's had. And actually, if we look at GBTC, it's back at its March 2020 sort of levels, okay? Bitcoin isn't quite there. So this is a good indication. I'm going to overlay these charts to show you this. Sniper, very quickly. The Sniper's a great guy to follow, by the way. Again, as I said at the start of the video, somebody who I've taken massive influence from, following him for a number of years now. He's been more correct than most, if not all, on many, many things, not just the crypto space, markets across the board, and is well worth a follow. So good shout for him. This is something that we've spoken about previously, but we weren't watching closely recently. We have also said that it is, and prior to this, a good way to look at institutions getting in and getting out, because you can see that actually institutions weren't quite as bullish on the 69k top. Are you doing this sort of analysis? Is this worked into how you figure out the markets? Because it should be, because then you're going to understand things a lot better. You know, many of you guys, just like me back in 2017, this is your first interaction with investing. There's a lot more to investing than buying Dogecoin and letting Elon Musk send it to the moon. You know, okay, yeah, that kind of works. And it has worked in a degree, and we made a big mistake in the prior bull market that we didn't buy Dogecoin. We actually made a video saying, I'm not touching it, it's a garbage crypto. As somebody who's a blockchain enthusiast, we didn't see the need to, and we didn't think it would do very well, but then we didn't account for Elon Musk pumping it. And at the end of the day, it's not about what I want, guys. Humble in front of markets. It's about what the masses want, what you guys want. And we're just there to speculate on that. Or I'm just here to speculate on that. So we've got the Bitcoin chart, and then we've got the Grayscale GBTC. So you can see that actually it's still at a 38 roughly % discount. So what have they got at here? 36. So there's a bit of leeway there. Its sell-offs are harsher, and its rallies are more sort of fierce is probably the right word. And you can see that actually, you know, what fronts runs what. So you had a move. These have moved pretty much together, but you could argue that the GBTC moved slightly. Remember, this is a weekly time frame. Yeah, slightly with more aggression, was making its rally before the actual Bitcoin rally. So, as rightfully pointed out by the Crypto Sniper, start watching this, guys. Maybe as a front runner, and could you actually say that it's always been a front runner? Maybe. Maybe indeed. This is alpha right here, guys, that you don't get on other channels. Simply. You know, has this always been a first mover? Potentially. And this of course is a way to look at institutions. Where's the follow the money? Who has more money, retail or institutions? Institutions. Retail as a mass does, but often retail gets manipulated right at the top and right at the bottom. And which is really why since the start of this year we came out and said we're not bullish or bearish here. and that we're not being perma bears here when lots of people still were. Many YouTube channels literally waited for the FTX crash and this area here to become super bearish. And you've got people out there that are saying they've called the bottom and they bought the bottom. They bought the bottom here, 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 here. It's just, please don't get suckered in, guys, to the kind of bravado with markets, and judge somebody on their merit. You know, on what did they do last year? Take a look at that. Were they out the market? Were they in the market? Were they bullish? Were they bearish? How's that worked for them? And then take a look at where they're at now and judge them on their actual results, not what they tell you they've done. Okay, this is where our channel separates itself from the majority of the crypto channels out there. And the reason that that's the case is because we're not just content creators. We're real investors, real traders. You can find out more about that on in my Patreon. For anybody that wants to join it, you guys get, it's really good information. I've not even actually discussed this with my Patrons yet, but they all know about it. So you guys get, there's no, it's not unfair or anything like that. I had a few comments on that, but it is what it is, guys. And at the end of the day, we are sharing genuine content on here that you don't get elsewhere. So that's something very interesting to watch moving forwards. We've got the US will hit its debt limits on Thursday. Treasury Secretary Yellen notified Congress that the US will reach its statutory debt limit next Thursday and ask House Speaker Kevin McCarthy to either suspend or increase the debt limit. Wow. Yellen wrote that the Treasury Department will begin taking certain extraordinary measures to prevent the United States from defaulting on its obligations. So we have speculated actually that the yield curve, which is why we're not necessarily calling this a bottom, because we've still got this yield curve that is yet to play out. Now, this has got a 100% hit rate, but, and this is a big but, there is an argument that actually, have we ever been in this kind of a macroeconomic environment or an environment generally? So it's played out under a certain set of criteria prior, 40-year bull market for the bonds, and bear for the yields, but maybe that's now changed and it's a totally different environment. So maybe we don't get the crash. I'm not saying that we don't. It looks very likely. It's a 100% hit rate. We're going on the side of probability. We're not trying to do anything else. But there is that possibility that maybe it doesn't play out. That is absolutely a possibility. But that's potentially for a longer video. So this is going to be interesting. This is definitely something to watch, because this is going to have bearings on many things. This has a bearing. The debt markets are the largest markets really in the world. They're what back the FX markets to a degree, and it's really how sort of intra-countries communicate with one another. And any kind of defaults on a mass scale, it's kind of like that's what we saw in 2008. That's what we saw. Defaults are bad because it means that somebody loses down the line, and it often has a knock-on effect, this is going to be a situation I'm going to do a completely separate video on and monitor, but just something worth mentioning. One of the largest US colleges has begun teaching students about Bitcoin. This was something I found very interesting. And then let's just take a quick look at the week ahead, guys. So the markets aren't open, the US markets anyway, because it's Martin Luther King Day. On Tuesday, we've got the China GDP, and then we've got a number of other things. We've got the Bank of Japan rate decision, which is going to be interesting. With UK CPI, we've got a number of other things. This is all really dollar related, to be honest with you, when you're talking about those kind of economic events. Something I'll be watching, as I do actually think the dollar's at this sort of, if it's gonna get some strength, guys, it's gonna be here. If it's gonna get a bid, it's gonna be here. And what does that mean for Bitcoin after having its amazing run? Maybe pay attention to GBTC and see what that tells you. You could be looking at this moving forwards. But on that note, I don't want to waffle on for too much longer. I think you're going to have people looking at this dollar strength and trying to price it in. Take a quick look at the stock market just before I go. Yeah. So there's a lot happening right now. There's a lot of resistance that you're looking at across markets. So maybe it's one of those indecisive weeks, and it is looking like actually more than likely you're going to get a pullback into. You're going to get people, whenever you're at resistance, people will short it. And with the dollar where it's at, with this where it's at, take a look at gold, see if there's any alpha there. maybe. You know, it's looking like maybe you're going to get a pullback in the week ahead. However, does that oh bloody hell, does that pullback come in the form of something like this, which is just an indecisive red candle? You know, maybe it starts the week off heavily and then sort of forms a bit of a doji indecision, so it's not showing conviction with a sell pressure, and then you go on to do something like that and do this kind of a scenario. Actually, also, before I love and leave you, bit more alpha here. Let's take a little look at the 30-day Fed Funds futures. Let's use that one. This is rates. When they go down, it means rates are going up. When it goes up, it means rates are going down. Are we at the start of that here? I don't know. Maybe. We'll see. You know, the 30-day Fed Funds futures actually pricing in rates at 4.6 roughly, and we're at 4.11, I think. So that would mean sort of another 2 basis points. It's kind of about where we're looking at. And does that mean that's the top for rates? Maybe we have something like this. You did see a similar thing, or are we just here and this gets retraced and then, but not quite coming back down to these lows, and then we see that continuation? Lots of ifs, buts, and maybes there, guys. But the GBTC thing's certainly worth paying attention to. We're going to have to watch, because this is pretty bad news, right? And actually worrying news when you understand just how much is tied to the debt markets. This has gone on for 16 minutes now, guys. I'm not wanting it to go on for much longer. I'm going to love and leave you on that note. If you've enjoyed the content, like, always appreciate it. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Sunday, guys. See you in the next one.